Welcome to the Real Estate Show. My name is Ryan Secco, aka Captain Ryan. Look, today I brought in a special team member, a special guest, the main man, David Blatt. This guy is based out of New York City. He's going to teach you guys. Look, the title of the show today is How to Fund Your Next Deal. So how are we going to find the money to actually take down that apartment complex that you guys are searching for? So look, Grant has actually asked me to reach out to thought leaders, to reach out to all of our team members across the board to get them on this show so you guys have the information. You guys know how to get money. And I think I said that wrong. It's actually today's goal is knowing how to know to get money. So today we have David Blatt in the house. Before we get into it, David, I just want you guys to know that this podcast is actually sponsored by Grant Cardone, and he has an investment opportunity for you guys to where if you guys want to be passive investors, if you guys always wanted to have passive income, but you just don't have the time, you just don't have maybe the knowledge, maybe you're just getting started out in real estate and you have money sitting on the sideline, well look, go to ormondinvestment.com. Again, you can go to ormondinvestment.com. That link is actually going to be in the show notes. So you guys can go onto the website. You guys can get all the information. So look, if you want to invest in real estate, but you just don't know all of the information that David's going to share with us today, you guys can join our team. Check us out. So David, first off, thank you so much for joining us here in the studios.
My pleasure. Thanks for having me.
David and I actually know each other because when we're looking for debt, we actually reach out to key team members, right? Now, David, he is the owner, CEO of CapStack Partners, and this company is based out of New York City. So, David, really, in 30 seconds, in a minute, give our audience just a quick, intro of who you are.
How you doing? I'm David Blatt, CEO of CapStack Partners, and I run an investment bank, and I work with investors in real estate that are looking to get funding for their deal, debt or equity, and I essentially become part of their team to help them find the right capital partners, whether it's bank financing or investors or what have you, and just to get that deal done.
Okay, I love that. And so you actually told me before we started this interview. I said, what do you want the audience to get out of this whole conversation, right? And you said, I want knowing how to know to get money. Now, what does that mean?
Well, it's not about knowing, just where the money is or knowing that there's a bank that does one thing. You're going to run into opportunities where it's just a great deal, but you haven't really gotten your hands around, okay, how am I going to get this deal funded, right? And that's the name of the game.
Yeah.
Right? So it's really about knowing how to know to do that. So you're going to want to think about, okay, who am I going to be able to access as a resource to do that, which is a role that I play with a lot of groups who are investing in real estate. Mm-hmm. So it's knowing how to build the team to essentially be able to go out and access groups that have the money that are going to come in and invest with you or lend to you on the deals that you want to get to, no matter where you are in the country, no matter how big the deal, and no matter what type of a deal it might be.
Yeah. Now look, before you share your story, one of the biggest things when you're starting your investing career, right, as any real estate investor knows, you're always, sometimes you're worried to go out there and take down bigger deals because you feel like once you have the deal, you have nobody to reach out to actually source the money, right? It's a common problem. Sure. Where do you think, and you know what, maybe I'm just trying to think. So I mean, where can people go to? I mean, they can go to somebody like you, right, where you have a whole shop set up, right? So they could use you as a team member, right? So what would you tell the audience? I mean, as far as, hey, you know what, you find a good deal, there's money out there. How do they reach out to somebody like you? How do they make that introduction?
To someone like me?
Yeah.
Well, I mean, you just reach out. If you have a good deal, I'll tell you pretty quickly. For me, the screen is whether you have a good deal, and I can tell you what kind of money we can get and the best way that we can get this done and how quickly we can get it done.
Okay,
so,
good.
Yeah.
Good. I love that. I love that. Now look, let's just jump in because I want everybody to know that you're a real human being, right? I want people to know you're real. How did you get started in real estate?
I just decided that I wanted to get started in this business because it's an amazing business and it has created a lot of wealth for a lot of people. And so I decided that I just started to cold call people that were really good at what they did in real estate, and that included investors, developers, brokers. And I just started to give them a call and say, hey, I want to come in and grab a cup of coffee or something and just hear what you do. And then at the end of every one of those conversations, I said, who else do you know that you think would be worthwhile for me to speak to? And within about a month, I had a network of about 50 powerful people in real estate that I essentially created a mentor base and just people that I could access for any part of a real estate deal. And so I ended up getting a job with a developer who was doing a lot of distressed deals. And he was actually going to hire a receptionist. I had just come out of a couple of graduate schools, so I was definitely overqualified for the job. And I called him up and I said, hey, you are about to hire the most overqualified receptionist you will ever have. And you're going to teach me everything about the business. And you're going to introduce me to whoever you know. And you're going to give me equity in the deal where there's opportunities to get it. And when I'm done with this, I just want you to know that my intention is to leave and start my own shop. And
so you started out as a receptionist?
I did everything, and I was just there listening. To me, it was an apprenticeship, and I really just got to see the business inside out, and particularly on the distress side. And within about 2 years, I left, and I just found my first deal and raised money, and I took it down.
Wow. So from there, so you cold called individuals, you cold called key players in the real estate space, right? So for those of you guys that are listening, don't be afraid to call reaching up, right? You were reaching up and you were able to find some great mentors, right? I mean, that's something
Absolutely.
that I found. That's something I found too, is mentors. I've always tried to reach up and reach out to people who are getting the deals done, right? So what would you recommend to our audience, right? Just starting out in real estate, what would you recommend, like I'm just starting out. A lot of people talk about fix and flips, or buying a single family house or a fourplex. Where would you advise them to start?
I think with respect to creating that network, you want to go find best in class guys all over the country, and reach out to them. And the one thing I will say about this business is that it doesn't matter how successful you are, people just take your calls, because in this business, you never know where your next deal is coming from.
Yeah.
And nobody discounts that. The most successful people in real estate realize that that next call may be some guy you've never spoken to, and he's just going to have a lead on a deal. And he'll just have that conversation, because the bigger your network, the more opportunities you're going to get.
And that's perfect. So if myself or a listener is trying to reach out for debt, right? So you found a good deal. It's 100 units, it's 50 units. How would I approach a guy like you at CapStack Partners and just say, hey, David, without dumping on you, right? Saying, hey, David, I got this great deal. Like what are you looking for? How do you know a person's legit or not legit?
Well, first of all, I take every conversation.
Okay.
I hear it out.
Yeah.
Just like all the people that I reached out to.
Yep.
So I hear it out, and I'll let them know pretty quickly what my thoughts are on the deal. And it's not a matter of dumping on someone if it's a bad deal. It's more a matter of saying, your time is really valuable, my time is really valuable. So I would rather you come back to me with something that I think has a high likelihood of success.
Okay.
Because if I'm succeeding, that means you're absolutely succeeding.
Right.
So that's pretty much it. I'm taking every conversation because I abide by the philosophy. You just never know where that next deal is coming from. And some guy who is doing some small deal now could be doing a monster deal on the next one.
Right.
And so, that's the approach. And I just love the business, so I'll listen to anything.
So somebody coming into the deal, because look, I want to give them the meat and potatoes, right? I want to give them the no fluff, right? This is always something that I missed when I was looking for real estate data, right? They're like, oh, that's great. You told me, you can call me, da 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 da. But what do I, like, for me, like if I don't have a net worth say the property is $5 million and I don't have the net worth of $5 million bucks, right? I mean, can I even qualify for a property that size?
So if you called me and said, I've got this great deal tied up, or I have access to it, and it's a $5 million deal, but I don't have the $5 million, that is not a non-starter. We can make that happen. I'll give you a better example. I have a developer who did $1 million deal. He was able to get it done with his friends and family. And then the deal he called me on was a $200 million deal. So that's a bit of a jump.
Yeah.
And I have to say, first, I was impressed. Here's a guy, he's going for something. And he was going for a multifamily portfolio, something that he knew how to run, because he had rolled his sleeves up on that smaller deal. And I asked him straight up, I said, what kind of money do you have? Obviously, this is big time.
Yeah.
And he said, I've got a few $100,000 that I can kick into this deal. That isn't going to make the deal happen, but I told him, you know what? We're just going to put this thing together, because the deal was good. He showed me the deal, and the deal was great. So it was just a matter of breaking down all the pieces that you need for a deal like that. And I said, first and foremost, are you negotiating with the seller to tie this deal up? He said, well, no, I don't really want to do that. And I said, you got to go and do that. I said, the biggest value that you can get a hold of here right now is at least getting somewhat control of the deal.
Okay.
So that's what he started to do.
Okay.
And
so he called you before he even had the deal tied up.
That's right.
Under contract.
That's right.
Okay.
And that was fine.
Okay.
I don't need to come into a process later on. Otherwise it's a waste of time.
So you're a team member. You're saying,
exactly.
Hey, I'm a team member. We do it a lot with different sources of debt, right? Our different key team members. We always call them and say, hey, what do you think of this deal? Hey, what do you think of this? Because it's really important to get your input on a debt perspective, or any perspective, right? I mean, a broker, anybody that's a part of the real estate game, they have an opinion on what the deal looks like, how the deal is going to shake out, right?
Sure.
This is kind of the same in that same area. Just to put it a different way, we're a lot of mistakes, like a guy like me, or somebody listening, right? Where are some of the mistakes that I do when I call you with my first deal, right? Say it's my first deal. I'm trying to put this thing to bed. I went and searched out a 20 unit or a 100 unit deal, and I just want debt. I'm hungry. I'm hungry for debt, and I need to get it placed. What are some mistakes that I'm doing saying, hey, David, this is what I have. Like, how could I be better prepared?
I think that the biggest mistake that a lot of guys make are misrepresenting what they have. So you'll have a guy that he actually went in, had enough for a deposit, put it up, tied the deal up, and he's going to need to come up with a lot more, let's say the $5 million that he absolutely doesn't have.
Yeah.
But he doesn't want to look like a guy that doesn't have it because he's doing a big time deal. And so we get down the road where we find a lender, and I'm out there talking to my relationships, and they are relationships. It's not that I'm just picking up the phone cold calling banks that I just think might get the deal done.
Right.
They're people that I know, and I'm basically saying, this guy has all the money needed. We just need you to come to the table with the debt. And then, of course, we get down the road after spending time and money, and it turns out that they never really had it, and they just weren't upfront about it. Because we can handle it if we're upfront about it. There's a lot of ways to handle it, but once they do that, you just kill your credibility, and more so, it comes down to wasting your own time and money as an investor. You're never going to build a portfolio that way, right? And that's the whole point. You want to own real estate to get wealthy.
So there's two different classes that I always see, right? I mean, as far as buying these deals and going out and getting debt, there's the syndicator, right? The person who maybe is a little bit newer or experienced, and they don't have a lot of money, right? They don't have. They're trying to put a deal together. They have zero equity, right? What are you seeing as far as a guy like me? What do I need? Is it a sponsor? Like a guy like me, maybe my net worth is $1 million, or $100,000, right? But I want to scale up because Grant and I always talk about, how do we go and jump from, how do we go and buy 16 units minimum all the way to 50 units, right? So if I have a net worth of $100,000, but I really know real estate, right? Because a lot of our viewers, they're like digging into the books. I mean, the questions that they send me are phenomenal, right? So they know, but they just don't know how to get the debt portion, right? So they're like, okay, I've got, some friends and family. What are the moving pieces, right? So if they call you up and just say, hey, you know what, I'm worth 100, but I've got my dad is worth, 5 million. Is there some sort of parameter that banks need to go out there and have that credibility?
Yeah. So if you're talking about lenders and you're coming to the table with a deal that is kind of outside your own balance sheet,
right,
and what you can afford, but you have somebody, who can either, whether it's your dad or somebody that's willing to come in and sign on with you.
Yeah.
That's really the key. And then what I always recommend to guys, I think going back to some of the mistakes, a lot of investors will come into this game thinking that they're going to take this down on their own. And I think that the most successful investors, developers of every size are always bringing in either other investors alongside them, other partners alongside them, and through that network of capital, they're able to access more capital. And if you look at the big time institutions, even the public companies, that's their game. They're always coming in and partnering up and pushing around, okay, you bring in a piece here, you bring in a piece here, and then we'll bring the bank to the table. And they're always happy to lend to those groups because there's so much money now coming in.
Yeah.
So bringing it back to what you're touching on, what you want to do is find partners, and they don't have to necessarily be the kind of partners that are coming down the road with you on every deal forever, but on a per deal basis, if you don't have that buy-in for the $5 million deal, but you know somebody who can qualify to get that kind of financing from the bank, share the wealth.
Right.
You've got control of the deal. Right now, there's money chasing deals. So if you can get a hold of a deal, then we can get the money.
So if you could find a good deal, and what are some of the mistakes that you see on individuals underwriting a deal, right? Because that's what we're talking about here, right? If you could actually get a really good deal and have all the adjustments for the numbers, like what do you look at? Where are the most mistakes when they send you the underwriting of what they have?
So I always see that the projections can be a bit ambitious. The refinancings on the back end or even the sellout may be a little higher. I always ask the investors that I'm working with, even if they haven't gotten the deal tied up, to send me their underwriting, and then we'll re-underwrite, and anything that we'll end up going out to the lenders with, we always re-underwrite that.
Right.
Because we know exactly where they want to see certain numbers, how they want to see it, and lenders inevitably will ding you on whatever numbers, because they just assume that you're, shooting for pie in the sky numbers. So if you can come in with something that's really buttoned up and packaged well, it doesn't leave them much room to say, oh, this isn't right. So we're always scrubbing all of that, and we're doing a lot of our own independent market research. So if you're bringing in a deal from, South Florida or Houston or whatever it is, any numbers that you're telling us that are rents or where things are trading, we're going to independently verify all that, and we'll either give you those comps if you didn't have them, or we'll have to have a conversation and readjust where that is. And very often, again, that'll maybe help you decide that you didn't really want to do the deal, because you'll probably run into issues because the seller's asking for a little much and promising things that aren't going to materialize.
Yeah. Now hitting on that, you said usually the projections are a little bit more aggressive, right?
Sure.
So what do you mean by that?
I think that we're talking about people thinking that the rents are going to be much higher, either because they're buying into like a value add play or something where they think they can bump them, you know, $200 a unit, but really we're talking maybe $100 at best.
Yeah.
Or on the back end, if we're talking about sellouts, where they think they can go in, if it's a fix and flip situation, and they rehab it and they'll be able to double their money, or something that doesn't comp out in the market and has no basis for it. And a lot of this can sometimes get led by the brokers or the sellers themselves. So, again, we'll independently verify a lot of that information and bring it back to them so they understand exactly where the values are.
Okay. So just to kind of recap on that, because I want to move on. So you're saying the projection. So I'm coming to you and I'm saying, okay, hey, look, the rents right now are $500, but I think in 12 months they're going to be $800, right? So that's a pretty big jump, right? And on a lot of these pro formas, we're seeing that too, where and I want to ask your opinion on this value add play, right? Because for those of you guys who don't know, in the multifamily space right now, this whole value add, right? So you buy a property, you fix about 15 units, and you say, hey, we're getting $150 to $200 rent bump, right? So we think that you can get that $200 rent bump across all 200 units. And so they're building this into their pro forma and their numbers, but what they're not telling you is that you have to do all the work.
Right.
You have to do all the work, and then maybe if the market continues to trend upward, you're going to reap the benefits, right? So is that what you're, as far as like, okay, look, the rents are $800, knowing the market, like, hey, where are your rents? Like, what are your comps? What are your competitors? Where are those rents coming at? And then also your expenses, right? So knowing where your expenses are, so you're saying, what I got out of that is you're saying that, hey, know your numbers, right? Like really know your numbers well. So that way we don't have to readjust them. And do you believe what the brokers say?
I never believe what the brokers say.
Why not? You don't believe what the brokers say, man? You don't believe? Okay, so I love that. Robert, do you have any questions on that? Or are you good? Okay, because I just want to make sure, and Robert, you could speak up. Like if you have a question, please feel free. Because look, I want to keep you involved in this.
Well, thank you, Captain Ryan. I truly appreciate that.
Well, no, we really.
You're such a good guy, dude. You're just such a good guy.
You're
so good, dude.
Robert.
You're so good.
Well, no, look, guys, the reason why I even want to do this, the reason why I want to bring you in here and have Robert in here is because, look, we all want to do deals, right? We all want passive income. We're all trying to make our way. And, I love your story, by the way, of going out there and cold calling people because it fits in what we do, right? I cold call Grant, and that's how I got here. So getting back to like multifamily and the debt portion, right? Because I don't want to go too far off of that because I really want to give people something they can go and take action and do. If you were putting a deal together right now, and I know we don't have numbers, right? What would you do? Just kind of walk me through your process. Like hey, like how do you find deals?
I think that there's this trend in the market where you're getting these whispers on off-market deals. I don't believe in that. The concept of off-market makes no sense because the minute someone's sharing this deal with you, it's on market. And more so when you're in a real estate market like this that's so ultra competitive because we're talking about money chasing deals. Any seller that is relatively sane is going to fully market the hell out of a deal to maximize the price.
Right.
Otherwise, they're just not sellers.
Right.
So I would say that the first thing you don't do is get caught in this concept of off-market. And you just really have to value the real estate in a fundamental way. And so how do you get out there and find deals? There's a couple of ways. First of all, you want to just get on the radar of all the brokers that are specializing in the kind of deals that you want, right? So you got to follow the trades, you got to go on the websites, you got to figure out, okay, this is my market, this is the kind of multifamily I want. I want a value add, or I want a luxury play, or I want this sizing. Who are the guys that are trading in that? You want to make sure they know you. So you're not going to get the off-market deal, but you can at least start to get yourself in a position where you're at least in the top 10 calls of I just got this in. So you can get a jump on reviewing the deal and seeing if it makes a lot of sense.
Okay.
And then trying your best to position as at least a finalist or someone who has control of that deal.
Would you recommend they reach out to you before they find the deal or after?
I think that it's most beneficial that we have a relationship of some level or an understanding of the types of deals that you're looking for before you look for the deals.
What size deals do you do? Do you do big deals? Do you do small deals? Give me a price range for everybody.
I would say that, anything from 5 million up to a few hundred million.
And that's purchase price, correct?
That's right, all
Okay.
in. Yeah,
Okay. So all in. So if you're looking at a $5 billion deal, they can call you.
absolutely.
Okay.
For sure.
When they call you, again, just to reiterate, when they call you, they need to be prepared with, okay, what is the underwriting? What is the deal? What's the story, right? Do you take into account the story of the property?
I think I absolutely do, and more so, my mind is filtering because I'm just trying to distill down what it is that you're telling me from a value standpoint. Where's the play? Because when I'm hearing it, I'm thinking to myself, who's going to respond to that on the lender side or even an equity side?
So when you go out and you try to source the debt, right? Because you're the broker, right? I mean, you broker the debt, right? You go out and you
Sure.
say, hey, look, I've got a guy, Ryan, who wants to go buy this deal. He needs $5 million. By the way, here's his story. How big, like experience-wise, how big is that when it goes to you sourcing the money from your lenders?
I think that it has a lot of impact. It has a lot of impact because if you have a great deal in hand, there's definitely, call it an intangible credit that you're going to get for getting a hold of an opportunity, right? And that story, real estate's a story. It always is.
Yeah.
So you're definitely going to get some credit. And what I would say is, and this is really where I come in, it's more a matter of hearing the story and then saying, okay, who from the lender side is going to respond to that story, or equity side, and come to the table with the money? Because there's going to be, listen, you're going to get no's.
Yeah.
Guess what? On to the next, and that's
Okay.
fine. That's just how the process goes, right? It's just like when you're looking for deals. So,
Well, what if I had a deal for say it's $1 million or $5 million? The price doesn't really matter, right?
no.
Say I have $200,000 and I want to go do it myself. I need equity, and I also need debt, right?
Sure.
Where would I go? Where would I'm going to call you for debt, right? The debt portion. But where would you go for equity?
I mean, at that sizing, I can bring equity to the table.
Okay. So they can call you, like if it's on a bigger deal, they could also get equity as well?
Absolutely. Absolutely. I would say if the equity check size is around 3 to 5 million and up, then that's no problem. There's equity groups out there. Whether it's smaller investment funds or even individuals that are just interested in taking a passive position with somebody who has a great deal, for sure. And then what's great about identifying a deal and bringing in an equity partner like that is you've now going back to, well, I don't have the balance sheet to take down this deal or qualify with a lender. Now you've got an equity partner that does. And so going back to this $200 million deal, that's exactly what we did. We're talking about a loan size of around $150 million. And again, we're talking about an individual that's got a few $100,000, which is real money.
Yeah.
But clearly not enough to be taking a deal down that size. But that's okay, because the deal was great. And this guy is a good operator. And so we went out and presented that story to an equity group, and it resonated with them. They got it, they liked it, and they realized that not only is it that they need to bring the money to the table, but they're also going to have to be the balance sheet that brings that size debt to the table. That's just part of the deal, and they get it. And they know that someone like this guy isn't going to be able to do that on his own.
Yeah.
But that's okay, because again, there's money chasing deals. So if you can get your hands on a good deal and the money can get a return, then they're going to get on board with you. And it's just about knowing where to find that home.
So as the CEO of CapStack Partners, right? I mean, you guys are the middleman, right, in a sense, to where the investor calls you, you say, okay, look, let's tighten up the hatchet, let's tighten this deal up, let's package it, and then you go out to your network. How many sources of money do you have? I mean, I know it's probably a lot, but really, is it 20? Is it 30? Is it 40?
I would say it's far greater than that. we're doing deals all across the U.S. and even Canada. I built up a huge network of banks with whom I was doing business and equity groups that were investing into these types of deals. So that's really where my network of capital comes from. And about 5 years ago, I decided market was turning around, wasn't much more distressed, and so I wanted to just take my relationships and say, okay, I know how to put deals together, I know how to raise capital, and I know how to identify good operators and developers. And if they're good at what they do, then they're not going to have enough time to really understand and pay attention to the money side of this. So I just got to find those guys, and they have to find me, and then I can access my capital relationships and use my expertise in putting the deals together from that end. And that's what I've been doing for the last 5 years.
Where did you start? I mean, as far as learning more about debt and money, what would you recommend to the listeners? A good place to start. Say a guy like me, I'm just starting out. I want to know more, right? Because I mean, a lot of this stuff is confusing, and I'll just share with everybody right here too. I mean, I bought my first house, right, and it made me realize how little I knew about even interest rates and what an FHA loan is or a conventional loan, even on the residential side, And then when I started hanging out with Grant, it started talking about the assumptions where you're assuming loans and all the different criteria that you have to go through to get these deals, right? Where would you start? Like what's a good source?
So I think that God, that's a good question. And just to add to the complexity, right? If you think about real estate's one of the oldest businesses. Ancient, and a lot of what you're talking about with assuming the mortgages and title and all that stuff is things that have been around for hundreds of years. So you're dealing with that aspect and kind of weird things going on there, and then you're dealing with things that are just kind of on the cusp and the forefront. In terms of accessing money like crowdfunding and all these other ways to like get a hold of money. So it's like the old and the new. So what I would say is there's a lot of great resources out there. So, I mean, look, I think Grant and everything that you guys do is a great resource, just breaking it down. I think talking to people in the space is another great way. And I think there are so many great real estate trades. If you are reading about deals, whether they're in your backyard or just anywhere else, you really get to pick up on how people are putting these deals together. And I'll tell you, that's what I do. I like keeping up on deals because each one's different. It may be the same multifamily type property that you are familiar with owning or operating, but someone did it in a way where they brought in a different kind of lender that you never heard of before. And I mean, a lot of times we'll just get meetings with a lot of these groups and say, okay, tell me about your program. Let me understand what you're lending on. What do you like? What kind of stories do you like? And that's by getting to know that, we just get smarter and smarter about what kind of money's out there.
And then, what kind of lenders are there? I mean, just kind of breaking it down simply. I mean, it's
so you've got your traditional banks, which can range from your smaller community banks right down the road to the big money center banks that everybody knows, like the Citis and JP Morgans of the world. And then it gets so much wider from there. You're dealing with life insurance companies. Every one of them has a real estate arm that lends and invests if the deal size is
life
right.
insurance company lend money back to real estate?
Absolutely. They will go out, think of a name, all those commercials that you see, where they're trying to sell you life insurance. Well, guess what? They'll lend you money on on real estate investments. There are public REITs that are out there doing nothing but lending, mortgage REITs. And they're basically lending money to earn an interest rate for their investors who are the shareholders. So you could actually invest with them and get dividends, which are essentially collecting interest off of real estate that's being lent on that you may be a borrower of. And then you have just your private funds that can be bridge type lenders to bigger kind of debt fund, hedge fund type profiles that are just out there. And those guys love to hear the stories. Those are really the story-driven type lenders, the fixer-upper, transitional, value-add type play, fix and flip type play. those groups will definitely work with you from that end of it.
Switching gears to private equity,
Sure.
I mean, starting from nothing, right? I mean, I had to go out there and I had to raise money for my uncle, right? I mean, I was trying to do deals and I got to the point where I ran out of money. I was a commercial airline pilot for 10 years and I was like, okay, well, I have 50 and then I have another 50 and I sold my cars. I mean, I was selling everything to buy more real estate because I got this bug, I was like, man, I want to own it all, and I thought at one point in time I'd be able to buy a fourplex after a fourplex after work, and financially, I'd be, one day I'd be financially free, right? It's not that easy, right? Because the more properties you buy, the more you want. So it was funny, once I bought a fourplex and an eightplex and, houses, I was like, man, I want something bigger. So on the private side, right? I mean, like going out there and meeting you, right? Like, how does that work? Like how would you structure that deal if you were going out there right now and raising money on the private side?
Meaning in my role, or someone who's like looking to access that kind of money?
Look at somebody, like put yourself in somebody's shoes that's just starting, just starting.
I can tell you that those conversations are all within reach. So, there may be an intimidation factor because you're dealing with some guy,
totally,
all suited up who, is just super sophisticated about numbers and understands the business in a way that, maybe hasn't gotten his hands dirty, on the ground actually managing and, getting out there and competing to buy those fourplexes and eightplexes.
Mm-hmm.
But those groups, even more so, here's the funny little secret about private equity. It's actually a lot easier to get a hold of that kind of money than it is to get a hold of your uncle's money. Because you have to understand that these groups have raised billions of dollars that they now need to go and invest into real estate.
Yeah, but how does somebody like me get to that person?
It always comes back to you. You got to get a hold of a deal to really have a conversation that they're going to listen to.
Yeah.
But if you want to understand the kind of deals that fit, because every private equity group has a different size and a different target, and it's good to get smart about what the different groups are looking for. And that can come about by either having direct conversations with them. You can tell them I'm a big proponent, just get in everyone's face, find out what they're about. And otherwise, you can get out there, do a little research. There's trades. I mean, that's what we do. We know exactly who to go to because we just keep smart about who's doing what and where that fits, so that when we hear the story from that investor or a guy that's looking to get a deal done, we know exactly where that deal is going to find a home without question. And when we bring those guys in, here's what never happens. And this is what people are afraid of. No private equity group or even lender ever says to a guy, what are you doing here? Who do you think you are doing a deal of this size? Or, doing this? You've only done one deal or whatever it is.
Yeah.
They may say no thank you, but no one's ever going to call anyone out or anything like that. And I've gotten that concern from investors saying, well, what business do I have calling?
Well, I mean, I've been
guys?
called out before. I've been called out before when I make a phone call to debt, right? Like a lender. I tried to do my first deal. It was like a 20-plex in Arizona, and the guy started asking me all these questions, right? He's like, okay, well, what does this mean? What's this number? What's this? And I was unprepared. And so what ended up happening is I hung up the phone, and I was kind of my tail was tucked between my legs, and I was like, crap, I need to get, I need to sharpen up on the terms and what stuff means. What does a normal team look like? I mean, what do I need to have to come to you with a 100-unit complex and say, hey, look, I'm ready to do this?
I think if you know how to manage that kind of a deal, I think that is a huge plus, because you're not only now bringing a good deal to the table, but you're also bringing the operational expertise. So you're coming in with a story of how this property that you're going to buy is going to be worth more, right? There's a business plan to this thing. You're not just buying it and then kicking back, right?
How much experience should I have? How much experience should I have? Like does it have to be my own deals, or can I kind of piggyback off somebody else's deals?
You can absolutely piggyback. And what I would even say is, if you don't have the experience, but you know this is a good deal, then share the wealth, partner up with somebody who does have the experience. Because now you've got a well-rounded team that you can present to not only the lenders, but investors that you may need to bring in.
Yeah.
Right? And that's just going to give everybody comfort. And you know what? You do that one deal with that guy who just has that phenomenal track record.
Yeah.
And when it comes time to go out and raise money on that second deal, no one's going to sit there and tell you, well, yeah, that last one, you were with that other guy, and you're doing great on that deal, and you found another great deal that's exactly like that first deal, but you're not really qualified.
You're now associated with that
Exactly.
that group.
You get the benefit of that association, and then you can. That's a springboard.
What do I have to give up though for that? Like if I was going to go to Robert, he's a sponsor, right? So the sponsor is the guy who has the net worth, who has the credibility, who's doing deals possibly, right? Or maybe just high net worth guy. What do I have to give him? Like, do you have to split the deal 50-50, or like what's the common thing that you see?
I guess
it all depends on the deal, right?
Sure.
Yeah.
It all depends. It really all depends. What's being contributed of value. And I think
say he's bringing his money to the table, right? And I'm going to bring a little bit of equity, but I'm going to run the deal. I'm going to run the whole thing. So what would be a good split? Is there a good split, or like could I split it 50-50, 70-30? Like, what would you say?
Well, I think that generally speaking, at every level, the way that money gets treated usually until it gets returned is typically the same, right? So whatever little amount you have and whatever amount Robert puts in terms of the balance, usually is going to get treated the same, with maybe some kind of hurdle or some kind of return built in at the same level, right? And then the sweat that you are contributing to that deal afterwards starts to shift that split in your favor. So let's just use numbers as an example.
Okay.
Right? Like Robert comes in with 70%, you come in with 30%, and then you guys go in, you're working the deal, you're bumping the rents, and then you refi the deal or even sell it out, and now you've returned your 70 and 30 and some kind of preferred hurdle or some kind of rate of return on top of that, some percentage, whatever that number is, 6, 8, 10, and you created all that value, right? You created the profit side of this now. And so it means that you should get something more than just your 30% back. What that number is, usually subject to negotiation, and I probably need more information on the deal to give you a really specific breakdown.
Yeah.
But I will say that when we're dealing with our investors, particularly if they want us to raise the equity as well as the debt, then we're usually not only helping put the cash flow projections together, but we'll also work on what we think the right waterfalls could be. Because now when you're...
And where are the waterfalls at? Are those are going to be in the operating agreement, right?
Yeah, those are going to get captured in your operating agreement.
Would you recommend to our listeners going out and reaching out to an attorney or somebody, who puts that kind of stuff together, or can you just create that stuff yourself?
No, you definitely want an attorney because
you can't. I mean, you could put it on a napkin if you wanted to, right?
Let me put it this way. I've done these types of operating agreements with waterfalls. I've been on the operator side, and I am an attorney.
Yeah.
And I hire an attorney to navigate that process. When you're talking about building your team, you just want somebody that is going to understand. They don't have to understand the specifics of the waterfall. They just need to be able to tell you that the language in the operating agreement is how you understand the business deal that you worked out with your partner.
I love that. What's your just kind of transitioning, what advice would you give somebody like myself or one of the listeners that are just starting out in real estate? It could be anything. I mean, what would be the best thing you just say, hey, you know what, this is what I recommend?
I think that it's really about defining what you want to go for. So if you want to go big, go big. If you want to pull together a bunch of eightplexes, do that, stick to it, get the deals done. The track record's everything. getting an understanding of the operational side of this business is so tremendously valuable that you will always be able to access capital and find guys like me that will work with you to get the money. And I wouldn't sweat that part. I would worry about getting smart about this business and just working to find the right deals.
Okay, so $1 million question. Where do you think we are in the cycle?
I think that we still have runway to go. I think that, my crystal ball is telling me that we've probably got like a good 3-year run left.
And this is on multifamily.
I think on multifamily for sure. Absolutely. I think that particularly in multifamily, there's talk about overbuilding. I think that those blanket statements just are just that.
Yeah.
Real estate's a local game. And I think that right now there's just a lot of demand for rental. And I think that with rates rising, you're going to have a lot of people who maybe were on the cusp of being able to buy that aren't going to be able to. You're now creating a tenant base out of those guys. And I think that that's just going to drive continued demand on the multifamily side.
Where are you seeing some strong markets at?
I think that a lot of markets in the Southeast are strong and are going to continue to be strong. I really like South Florida. I like Tampa. I like Atlanta a lot. I like a lot of the markets in Texas a lot. I think that there's a lot of runway there. I think.
Why? What's the reason?
Well, I think that you have a lot of job growth that's happening there, and I think there's a particular phenomenon in some of these markets. So South Florida in particular has always just been a strong market, but it's had its up and downs in the cycle. But I think for the first time in this cycle, I think Florida is becoming one of those world cities that is being referred to globally. You're just seeing a lot of investors coming in from other countries, and it's on their radar like it's never been before. I think places like Atlanta are also just growing. There's just a lot of industry and a lot of job growth, and I think people are just locating there. You look at places like Austin, where there's just a huge tech presence going on over there, and I think that that's a major driver. Even the energy markets, which I think are going to bounce back, are going to have a lot of positive impact with markets like Houston and Dallas. So I think that those are a lot of the drivers that we're seeing.
I love that. I love that. Where could the listeners find you at?
You can certainly find me on our website, which is www.capstackpartners.com. My Twitter handle, CapStack, @CapStackCEO.
You got that one, huh? CapStack? That's a good one, man.
And my LinkedIn profile, feel free to message me.
I love that. I love it. And before we go, Robert, is there any takeaways that you got out of the show that you want to add?
I mean, I think the most interesting thing is like you're representing yourself as somebody that, if they're just getting started in the market or just getting started in the game, that they could go to you. And I think the biggest question that I've had the whole time is like, why would I want to go to you specifically as opposed to other people in the field? Like, what separates you out from maybe other guys that do the same thing that you do?
I think that twofold, and look, that's a great question, right?
Really
There's a
good
lot
question.
of guys out there that are going out and just finding the financing. But I think to the point that you raised earlier, we like to get involved with the groups that we work with and the investors that we work with before they even have a deal. A lot of guys are just kind of that high volume, come to me when that deal's all tied up. I want to get in there beforehand because I don't want you to make a mistake. A lot of guys project debt, with interest rates that are off or where they think they're going to be able to borrow more money, and they end up putting up deposits. The sooner we can get in there and really guide that process, I think the more effective they will be and the more successful they will be. And I think we cultivate a lot of relationships with groups and grow with them. And so I think that's the differentiator with us. It's really more like being that strategic advisor when it comes to accessing capital that separates us from just a broker that's going to go get you a loan.
So his name is David Blatt. He's one of the nicest guys from New York City that I've ever met in my life. I wish I would have met you 10 years ago when I was looking for money, when I was trying to fund my deals. If you guys have any questions, you guys can check him out on his website, which he's actually going to have in the show notes, as well as his Twitter handle. And then, I just want to say, I've learned quite a bit today from just our conversation. And one of the things, some of the takeaways that I got, and this is going to be huge for our listeners, is look, guys, go up there and reach up. Go up there and be a receptionist. Go up there, go and do whatever it takes to get around people, because I honestly believe that you wouldn't be where you are today if you didn't do that and find somebody that would mentor you. So I really appreciate your time. Would love to have you back. And look, we're going to dive into some more conversations. So guys, until next time, I hope you enjoyed the real estate show, and look forward to or look towards next Monday, because you never know who's going to be sitting in this seat. That's it.
Good, very good.
All right.
Mr.